Three stocks to buy for November 2019. This is, of course, the most popular series on the channel. I know this video is late, so I apologize for that, but we do have a lot to discuss today, so let's get started. Now, what I found interesting this month is that I started to notice a lot of value stocks start to go on sale here, where some growth stocks have actually recovered from the previous losses and are actually approaching all-time high in some cases. And this is the opportunity that I've been waiting for because I love my value stocks. So I'm going to discuss some of them in this video today. Now, our like challenge for this video is going to be 400 likes. You guys will easily crush that, I'm sure of it. And as long as we do that, I will continue making these monthly videos on three stocks to buy. Now, also as an added bonus for this month, we're going to have a raffle here. So you know I have a VIP membership group where I disclose my full private portfolio and I disclose my trades in my portfolio. But what I want to do for this month is if you drop a like and leave a comment down below, also share it with a friend if you can, I would appreciate that. But pretty much by doing that, you're going to be entered into a draw where I'll be giving you one free month into this VIP membership group, no strings attached. This means you'll have full access to view my portfolio. This means you have full access to view all the trades that I've made, and you'll have access to the Discord group for 1 month. And after that month, it's completely up to you if you want to continue staying in that VIP group. So I wish you the best of luck. I may announce the video either in a community post or in an Instagram post, so make sure to follow me on Instagram as well. But without further ado, let's get into this video. So our first stock here for this month is none other than the Golden Arches McDonald's, ticker symbol MCD. McDonald's is actually a stock that I bought back in mid-early 2018 when the stock was actually going through a lull and investor sentiment was fairly negative on the company. Fast forward now to late 2019 and we're starting to see the same thing happen again here in McDonald's stock. But as you know, if you watched my previous video, I have a lot of cash sitting on the sidelines that I'm ready to deploy into companies like McDonald's. And McDonald's is not a stock that actually goes on sale too often. If you take a look at this graph here, you can see that we correct anywhere between 15 to 20% on the stock occasionally. And then after that, it continues chugging higher. Now on this chart, you can actually see the last few corrections in McDonald's since the last recession. And you can see we're currently just about in the same range as well with the most recent correction, sitting in at just over 15% so far. Will we go lower and possibly hit $170 per share? Who knows? But what I want to do is look into the stock, figure out why it's dropping, and figure out if this is a good time to start buying more into McDonald's stock. So we actually peaked in early September at around $220 per share or so. And since then, we've pretty much been sliding week after week. Then came earnings and the company reported a miss on EPS and on revenue. Then if that wasn't bad enough, their CEO was let go due to a relationship with an employee, which was consensual, I may add. And then most recently, we saw the chief people officer leave the company because of the CEO's departure. So clearly there's been a whole slew of negativity around this company, but as a long-term investor, these are the kind of opportunities that I wait for. Now, I personally believe that most of this is short-term pain. Now, they did report a miss on earnings, and yes, fine, a stock should be punished if they do miss. But I believe we may have pulled back a bit too far here, and there was actually some good news that came out of this earnings report. Next, we had a CEO getting fired and a high-ranking person actually leave the company. Yes, not the best image for the company, maybe not the best for their management team, but they will get these people replaced, and I believe with the team that surrounds them, they will be back on track before we know it. I don't believe a company like McDonald's is a one-man show or a two-man show. It's going to be a huge team of people that actually help this company drive to success, and that's why I'm not too concerned here with this whole CEO departure. Okay, so now let's get into some of the good stuff here, which is actually the numbers behind what they reported in their earnings. Looking here, global comp sales, which is a major metric for chains and retail-related companies, increased 5.9% year over year. Consolidated revenues increased 1% year over year, or 3% in constant currency. Sales increased 5%, or 7% in constant currency. And EPS was actually flat, but in constant currency increased 2%. So not the strongest quarter for McDonald's here by any means, and although they missed analyst expectations, they still had growth. Even though it was very small growth, it was still growth year over year in the company. Currency fluctuation was clearly an impact factor here for McDonald's, but even with that, we still eked out a little bit of growth. But just to show their confidence in the business, they did state that they had returned $2.4 billion back to investors in dividends, and they previously announced a 8% dividend increase as well. So dividend growth investors, pay attention here. McDonald's is getting very close to becoming a dividend king with 43 years of consecutive increases, and the latest increase of 8% is higher than the last 5 years. This shows us strength, and this also pairs well with the starting yield of around 2.58%, which isn't too shabby either, especially for a world-class company like McDonald's. Now, I think what really shook some investors here is this statement, where they said that net income actually decreased by 4%, which raises concerns. Questions like, is this the beginning of more declines quarter over quarter, and will McDonald's ever be as profitable as it once was, start popping up in investors' minds, and the result is what we saw, a stock price that declines 15% in just a few weeks. And this, of course, naturally brought up concerns around their free cash flow, but in the conference call, they actually addressed this. So here you can see in a snippet, and I'm not going to read all of it, but I did highlight the important part where they believe free cash flow will continue growing year over year. So really the concerns on free cash flow, at least for now, until proven otherwise, should be a non-issue. Okay, so what are analysts doing here with McDonald's stock? So we can see that they see around a 17.5% upside from current prices. But what's more interesting to me is that down below, you can see that a whole slew of analysts reiterated their $200 plus price targets. This hints to me that many of them also believe that what we're seeing now is just some short-term turbulence. Ironic that I use this word because it's related to our second stock pick. But either way, I think analysts believe that McDonald's will get through this and come out stronger. Now, looking at McDonald's charts closer, there's three things that stand out to me. The first is we have corrected now over 15%, so I suspect we are closer to a bottom here based on past history of the stock. The second is we are approaching a critical support level, which is the 100 moving average on the weekly, and I think we may touch this or get close to that as we rebound higher. And the third is we are extremely oversold, indicating we could see a bounce sooner rather than later. So does this mean that McDonald's is a bargain stock or on sale right now? To be honest, based on its past, the current PE of McDonald's sits at 25.5. Not sure why this is saying 27.8, it probably hasn't updated yet. But even so, 25.5 isn't exactly cheap. I would say the low 20s based on its historical valuation would be fair, and under 20 would be a bargain. But here at around 25.5, we're actually still close to an overvalued price. But even knowing that and even seeing these stats here and these facts, I still may dabble in a bit more shares here of McDonald's. It is already in my top 10, but I want it to be an even bigger piece of my portfolio. I absolutely love this brand. I love the products that they sell, and I think in the future this will be a much, much larger company. People who think that fast food is dying, people who think that burgers and all these unhealthy foods aren't the future, well, McDonald's is proving us otherwise with their growth quarter over quarter, year over year. So really for all these reasons, this is why I had to pick McDonald's as my first stock here for November 2019. Now the second stock pick is another one that we kind of briefly mentioned in a few minutes ago, and it's a company that has been seeing a lot of turbulent times recently, and that is of course the Boeing company, ticker symbol BA. Boeing also released their earnings recently, so let's start there. This chart sums up the quarter that they had. Revenue was down from $25.1 billion to $20 billion, and EPS was down from 3.58 to 1.45. The main culprit has been the 737 MAX deliveries, or rather the lack thereof. Boeing also recognizes this, stating many times that their focus on safety of the 737 MAX is top priority and they want to get it back in the air as soon as possible. They did, however, deliver 62 other airplanes in the last quarter, and they do have a backlog of $387 billion, which is an enormous amount to keep them busy for a long time. The fear initially when the 737 MAX issue started arising was that this backlog number would shrink significantly, but $387 billion isn't too shabby. Now what I found interesting is the mention of the 777X, which should begin testing flights next year and have its first delivery in 2021. The 777X will be the world's largest and most efficient twin-jet engine, which will deliver 10% lower fuel use and emissions and 10% lower operating costs than the competition. So there's very high hopes here for the 777X, and you can bet that Boeing will do everything that they possibly can in terms of testing and certifications, all that kind of stuff, so that we don't see a repeat of the 737 MAX. All of this also has led to Boeing having a negative free cash flow for the quarter, going from $4.6 billion last year to negative $2.4 billion this year. Again, they cite the 737 MAX as the culprit. So it's very clear to me here by looking at these stats from their earnings that the 737 MAX did impact the business quite significantly, and the company recognizes this and they want to get it fixed as soon as possible. But what I find even more surprising is that even through all of this, investors are still sticking behind Boeing. This stock has literally held strong for 2 years, with investors refusing to let it drop below that $300 mark since the 737 MAX issues arose. And honestly, unless we see something tragic here again with Boeing, which I do hope won't happen for the sake of the company and for the sake of lives, I think that the worst really is behind us here in Boeing stock. Now, their CEO actually testified to Congress last week, and the whole world really had their eyes on this because it was a good gauge to see how Boeing as a company was handling the situation. Quite honestly, I think the CEO did well. There were some tough questions, and it was clear that Congress was not happy with how Boeing handled the 737 MAX issues. But the CEO did assure them that time and time again that the company recognizes that they were wrong and they will do anything and everything possible to ensure safety once again in their planes. And ultimately their goal is to bring back the trust from consumers and that high brand recognition that Boeing has held previously. Analysts see around a 10% upside in Boeing, but honestly I believe once we get past 737 MAX issues, and especially once the new 777X are getting delivered, Boeing will be a strong stock once again, and we can easily break over $400 per share. The stock currently sits at a PE of 53, but its forward PE is at a 16, which is in my opinion extremely low, and you can see this from the historical PE of Boeing that a 16 is lower than its average, which is around 20. So I think very similar to McDonald's, but for different reasons of course, Boeing is under a lot of scrutiny recently. But what's different from Boeing compared to some of these other companies is the amount of strength the stock has shown in the last year, ever since these issues started really becoming a major spotlight in the media. Also, don't forget that Boeing is a dividend growth company, although they've only started paying dividends recently. I believe that in the future, this will no doubt be another dividend king, because this is a business and an industry where they make a lot of money. So really looking at the current valuation of Boeing and looking forward as to where the company will be in the next year or so, I think that Boeing is still undervalued at current prices, and the worst may be behind us here in this stock. So I know the title says 3 stocks for November 2019, but for the interest of time, I'm going to keep this third stock short and sweet. The third pick here is Yum Brands, ticker symbol YUM. And this is another restaurant-based business that I believe is seeing a good discount right now. The stock recently took a 20% haircut, and this again comes after their latest earnings report. Now, if you're not familiar with Yum Brands, they actually own some pretty big restaurant chains here, including Pizza Hut, KFC, and Taco Bell. These guys actually have a very similar story to McDonald's on their earnings, which is a miss on EPS and on revenue. However, the concern here with their revenue was that it was actually down 3.6% year over year. And in terms of their EPS, I found this snippet in their press release. Essentially, they stated that their investment in Grubhub's value dropped, impacting them negatively by 15 cents on EPS. And if you remember that screenshot from a few seconds ago, their earnings actually missed by 14 cents. So we know the culprit of that miss right here. And honestly, I see this as good news because it means the core of their business, for the most part, is still doing well. That being said, breaking down their brands, you can see the strong drivers for same-store sales are KFC and Taco Bell, with Pizza Hut actually being a drag on the business currently. Increased competition from other pizza brands is hurting Pizza Hut. However, as they figure this out and figure out how to compete with competitors and kind of start growing this business year over year, which as an aside I believe they can do, KFC and Taco Bell will really have to carry Yum Brands in the meantime. Now, from a valuation perspective, Yum is fairly valued based on its historic PE, and with the recent near 20% correction, it could be a good play for those looking to diversify into some food-related stocks and not necessarily a tech-based company. Analysts here see over a 20% upside in the stock, and what we may be seeing right now is a temporary blip in the price similar to McDonald's. We could see buyers step in very soon as we approach very oversold levels here in Yum, which is again very similar to McDonald's performance. And I personally won't be a buyer here of Yum Brands just because I own a couple of other restaurant companies. McDonald's, of course, like I said, is one of those companies, so I don't really want to own everything in this space. But for those that don't think that McDonald's is a good value, perhaps you think that Yum Brands is a good value, so maybe a good company to look into here. Anyways, guys, this wraps up the video for November 2019 for 3 stocks that I'm buying or considering considering buying here for the month. Again, if you want a chance to win 1 month free of our VIP membership group, make sure to like the video and make sure to comment down below as well. Also follow me on Instagram because I may announce the winner on there, or I may announce it here on the community tab. Either way, guys, thank you so much for watching. Hope you enjoyed this video. Hope you learned something from this video. Let me know if you're going to be investing in any of these 3 companies or any other companies that we haven't discussed today. I love hearing from you guys every single month. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.